Ever found yourself daydreaming about owning a home but feeling overwhelmed by the idea of a brand new mortgage? What if I told you there's a path less traveled in the world of home buying? Yes, I'm talking about stepping into someone else's shoes and taking over their mortgage. Sounds like a shortcut to your dream home, doesn't it? But hold your horses. There's a whole world behind this idea that you need to unpack. And guess what? Today, we're diving deep into the what, why, and how of assuming home loans. But hey, before we embark on this enlightening journey, let's make a deal. If you find yourself nodding along or having those aha moments, hit that like button, subscribe for more eye-opening content, and ring that notification bell to join our community of smart financial navigators. And if you're hungry for more free and valuable resources, you absolutely need to check out our website, investingcouncil.com. It's a treasure trove of knowledge with a wealth of information on investing, building, and improving your credit score, and much more. Whether you're a seasoned investor or just starting out, our website and financial courses are designed to take your knowledge to the next level. Ready to unlock the secrets of assuming mortgages and home loans? Let's roll. You're here because you're curious about home loan assumption, a concept that might just be your golden ticket in the real estate game. Now, if you're wondering, what is the concept of assuming mortgages, and how can it benefit me? Then you're in the right place. Today, we're going to unravel the 6 critical things you absolutely must know before you even consider assuming someone else's mortgage. Trust me, this is insider info you won't want to miss. So, are you ready to become a mortgage loan assumption pro? Let's dive right in and start unlocking these must-know secrets. All right, team, let's get rolling with our first big question. What is an assumable mortgage? You might have heard this term floating around in real estate circles, but what does it really mean? Simply put, an assumable home loan allows a home buyer to take over the seller's existing loan instead of taking out a brand new one. Sounds pretty straightforward, right? But wait, there's more. Let's dig a bit deeper with another key question. So, what exactly is a mortgage loan assumption, and why should it matter to you? Mortgage loan assumption is like a relay race in the world of home buying. Instead of starting from scratch, you're handed the baton, which in this case is the seller's mortgage. And you run with it. This means you step into the original borrower's shoes, taking on the remaining mortgage balance, interest rate, repayment period, and other existing terms. This could be a game changer for you. Why? Because assuming a mortgage might help you snag lower interest rates, reduce closing costs, and even bypass some of the typical hurdles of getting a new mortgage. But here's the kicker. It's not always a walk in the park. There are conditions, requirements, and fine print that you need to navigate carefully. Now that we've got the basics down, let's jump into the meat of the matter. It's time to explore those crucial things you need to know before you even think about going down the mortgage loan assumption path. All right, let's dive into the deep end and talk about the legal and financial implications of mortgage loan assumption. This is where things start to get really interesting. First up, let's tackle the legal aspect. Are you aware of the legal hoops you might need to jump through for a loan assumption? It's not as simple as just signing a paper and getting the keys. Most mortgages have a clause called the due on sale clause. This means if the property is sold, the full loan amount is due. But wait, here's where it gets tricky. Some loans, especially those backed by the government, like FHA and VA loans, are assumable. This means they can be transferred without triggering the due on sale clause. But don't get too excited yet. Even with an assumable loan, you can't just waltz in and take over. You've got to qualify first. Lenders will vet you just like any new borrower, checking your credit score, income, and debt-to-income ratio. It's like applying for a new mortgage, but you're stepping into someone else's shoes. Now, here's another head-scratcher. Can you assume someone else's mortgage without any issues? The short answer? Not always. You see, even if a loan is assumable, the lender has to give the green light, and that's not guaranteed. Plus, if the current interest rates are lower than the existing mortgage rate, assuming a loan might not even be the best financial move. And let's not forget about the assumption clause in mortgage agreements. What is it exactly? This clause is what allows or sometimes forbids the transfer of a mortgage to another person. If there's no assumption clause or if it prohibits transferring, then assuming the loan might be off the table. With the legalities out of the way, let's steer towards the financial side of things. This is where you really need to crunch some numbers and make sure that assuming a mortgage makes sense for your wallet. Alright, moving on to a super crucial aspect of mortgage loan assumption, your credit score and history. This part is all about understanding how your financial past plays a starring role in your home buying future. So let's ask the big question. Do you know how your credit score affects your chances in a loan assumption? It's a key player in the game. When you're looking to assume a mortgage, lenders aren't just going to take your word that you're good for the money. They want proof, and your credit score is like your financial report card. A high credit score can be your golden ticket. It tells lenders, hey, I'm reliable, I've got a history of paying back what I owe, and I'm a safe bet. This can smooth the way for a successful loan assumption. But if your credit score is more on the needs improvement side, lenders might see red flags. They could worry that you're a risky investment and might not approve the assumption or might impose stricter terms. Your credit history is just as important as your score. Lenders will dive into your past financial behavior. Have you consistently paid your bills on time? Do you have a history of defaulting on loans? This history tells a story about how you handle money, and believe me, lenders are reading closely. InvestingCouncil.com offers a comprehensive credit score course that covers everything you need to know. If you are interested in learning the strategies to boost your credit score, we highly recommend that course. We will leave the link in the description so that you enroll in that course. Understanding credit implications is crucial, but what comes next is equally important. It's not just about whether you can assume a loan, it's about whether it makes sense for you financially. Now let's pivot to a critical element that many folks overlook when considering a mortgage loan assumption: the original loan terms. This is where the details really start to matter, and understanding them can significantly impact your decision. So, let's pose a crucial question. Ever wondered how the original loan terms can make or break your loan assumption deal? When you assume a mortgage, you're not just taking over someone's payments, you're stepping into their exact loan agreement. This includes the interest rate, remaining loan balance, repayment period, and all those little details in the fine print. Imagine this. The original loan has a fantastic interest rate, way lower than what you'd get on a new mortgage today. Sounds like a win, right? But what if the remaining balance is higher than what the property is currently worth, or the repayment terms aren't favorable for your financial situation? Suddenly, the deal might not look so sweet. Another key question to ask yourself is it worth it to assume someone else's real estate loan? This is where you need to do some serious number crunching. Compare the terms of the original loan with what's available in the current market. Maybe interest rates have dropped since the original loan was taken out, or perhaps the market conditions have changed. It's not just about stepping into a mortgage, it's about stepping into the right mortgage. Moving on, let's dive into something that many overlook. It's not just about the numbers and terms on paper. There are other factors at play that can influence your decision on whether a mortgage loan assumption is the right move for you. As much as we love a good opportunity in the world of real estate, it's essential to talk about the risks and not just the rewards. So let's address a crucial aspect of mortgage loan assumption that often gets glossed over: the potential risks and downsides. Here's something to ponder. Have you considered the potential risks and downsides of mortgage loan assumption? It's not all smooth sailing, and being aware of these pitfalls can save you a lot of trouble down the line. One of the biggest risks involves the terms of the original loan. For instance, if the interest rate of the existing loan is adjustable, you could be in for some unpleasant surprises with fluctuating payments. Also, if the market value of the property has decreased, you might find yourself owing more than the home is worth. That's a financial quagmire you don't want to step into. Another downside is the assumption fees. Yes, you might save on some of the closing costs compared to a new mortgage, but don't forget that lenders often charge a fee for loan assumption. This fee can sometimes be substantial, eating into the savings you thought you were making. And let's not forget about the due diligence. When assuming a loan, you inherit the property as is. This means any hidden problems or issues with the property become your problems. It's crucial to conduct thorough inspections and appraisals to avoid any nasty surprises. After considering the risks, it's time to explore how to make this work for you. Knowing the pitfalls is half the battle. Now let's focus on how to navigate this path wisely and make an informed decision about mortgage loan assumption. We've talked about what mortgage loan assumption is, its financial implications, the importance of your credit score, the role of original loan terms, and the potential risks. Now you might be asking, how do I navigate all this? Well, let's get into that. Ready to find out how you can smoothly navigate through the mortgage loan assumption process? Here are some practical tips to guide you through this journey. First off, get a clear picture of the existing loan. Understand every detail of the terms, conditions, and any pre-existing issues with the property. Knowledge is power, and in this case, it could save you from future headaches. Next, evaluate your financial situation thoroughly. Can you comfortably afford the mortgage payments? Does taking over this loan align with your long-term financial goals? These are critical questions you need to answer. Now, here's a big one. Do I need a lawyer to review the legal paperwork? Absolutely, yes. This is not the time to cut corners. A real estate attorney can be invaluable in helping you understand the legal jargon, ensuring that all the paperwork is in order, and protecting your interests. It's also crucial to get lender approval. Remember, just because a loan is assumable doesn't mean the lender will automatically approve you. Prepare to go through a similar process as applying for a new mortgage. This includes credit checks, income verification, and more. And finally, don't forget about the property itself. Conduct a thorough home inspection to ensure there are no hidden problems. The last thing you want is to assume a mortgage only to find out the home needs significant, costly repairs. Having covered these essential tips, let's wrap things up. Real estate loan assumption can be a fantastic opportunity if done right, but it requires careful consideration, thorough preparation, and a clear understanding of what you're getting into. And there you have it, a deep dive into the world of home loan assumption. We've journeyed through the what, why, and how of this process, uncovering the crucial things you need to know to make an informed decision. Remember, the right knowledge can turn complex financial decisions into opportunities for growth and success. Real estate loan assumption isn't just about numbers and contracts. It's about understanding your path in the journey of home ownership. It's about making strategic choices that align with your financial goals and lifestyle aspirations. So take this knowledge, use it to empower your decisions, and always stay curious and informed. Before we part ways, I want to remind you, if this video has given you valuable insights, or if you feel more equipped to navigate the world of real estate, then don't forget to hit that like button. Your support means the world and helps us bring more content like this to you. And if you haven't already, subscribe and turn on notifications. Join our community of savvy learners and get ahead in making smart, informed decisions in your financial and real estate endeavors. We've got a lot more insights, tips, and tricks up our sleeves, and you won't want to miss out. Thanks for watching, keep striving for your dreams, and until next time, stay informed, stay inspired, and keep making those smart financial moves.